Okay, it's 6 p.m. Chris, would you like to give the welcome um, before I start hosting?
Yeah, sure. I see we've got a ways to go. It's not unusual just for the presenters. We have 50 over 50 people registered. I had a few notes, Sarah, people just trying to find the link, so they'll probably join in as you guys are presenting. I just want to thank everyone first of all, and I guess a greeting. We've got great speakers again, so great job by the team to ask you guys to spend a Wednesday evening. And it is a busy time, right? Thanksgiving's just past us. Hanukkah, Kwanzaa, Christmas, New Year's. So very busy time and really appreciative. Those that aren't familiar, I think everybody, we've got some familiar faces popping on. We're a nonprofit 501c3, and our mission really is to connect with founders, investors, and people looking to support companies with global mindsets. And often those are immigrants, and often they are involved in technology, and it's a pretty dynamic group. I always tell people when I joined up, I didn't realize I was joining a movement, not just a community. And that's what it really is. And what's really dynamic is we've got people all over the world. And so don't be surprised if you get questions from, people from all over, which makes it part of the fun. But, a big welcome. I didn't want to take too much time. We only have an hour and want to really hear from our speakers. So welcome, and over to Sarah, who's going to host us through the hour. Sarah?
Yes, thank you, Chris. Hello, everyone. Thank you so much for joining us today. I'm very excited to hear all the presentations from our speaker, Adam Wells, and our two founders, Alex and John. So a little bit about brief biography about Adam Wells, our speaker for today. He's a serial entrepreneur with 19 years of executive experience. He has experience and expertise in market planning, workforce planning, and also product development and capital raising. He's currently the executive director at Golden Section, and we're very excited to hear your presentation, Adam, and the floor is yours.
Awesome. Thank you all so much for having me. It's really a pleasure. I got to meet Sunny, just within the last, month, and it's an honor to speak before all of you today. I'm really excited about it. So yeah, as Sarah said, let's see if the controls on this work. Yeah, I'm Adam Wells, currently an executive director, one of four at Golden Section. We're an early stage VC. We specialize in B2B SaaS marketplace, tech-enabled services on the B2B side. We've been around as a company for, I guess, maybe a little over 10 years, but have been investing, as a partnership for almost 20. This is kind of an exciting thing, and y'all have a special look. We're spinning out our business advisory and product development group from the VC into a company called Alloy. And this is the first time that anybody outside of 3 or 4 people in the company have seen this logo, much less know about the name of this new spin out company. So I thought it'd be fun just to launch it here tonight in front of all of y'all. Alloy comes from this idea that we want to strengthen the companies that we work with. We have about 45 portfolio companies across many different industries, and we find that journeying closely with them helps to strengthen them. So a little bit, just real quick background on me. I got a BA in linguistics from Texas A&M. That was after having been admitted to A&M as a computer science major, and then dropping that, and then doing business, and then figuring out that all the courses that I was taking wouldn't count towards business, and so needing to flip to another one. So kind of a circuitous route. I used to be a real estate developer, residential land development, an architect, and all around I've been a founder and an operator, and then over the last 7 years, an investor too. So it's a little bit of my background and perspective as we get into it. Today, I want to talk about 3 different areas. One called founder superlatives, and it's my term. You know, you'll hopefully get what it means here in just a little bit. Critical operating documents, and then what I call a capital journey. And so at Golden Section and now at Alloy, these frameworks are ones that I've put together over the years, and us serving many startups. And so I hope they're impactful to you, that y'all get something out of it. So founder superlatives, really what I'm sharing here is what we look for when we're looking to make an investment in a startup. We're looking for founders with a fundamental insight into the problem that they're solving through technology. And this fundamental insight can either be, a career of deep vertical expertise, or an identified market opportunity, that they really want to go after. But one where they have a significant understanding of either the buyer persona or the user persona. And so part of us, what we want to have founders bring to us is why the target niche that they're going after. Market sizes, customer segments, target niches. It's really important, as all y'all know, to be pretty targeted when it comes to that. There are disadvantages to going too narrow. There are disadvantages to being too wide. But we really want to understand why this niche and why not the one to the side or above or below it. Another thing that we want to know is, why is this particular founder the absolute best person to take this challenge and to build this company? That's where the superlative piece comes in. We're not looking for good founders, we're looking for the best. And, thankfully, our global economy is so big that it's not a finite game. There can be numerous best founders, even in a similar, even as competitors. And so we're not exclusionary there. We're just really looking for super driven people that have a real drive to build a company and to take a solution to market. We're looking for differentiation, like serious differentiation, not just marginal differentiation. We've seen, for instance, like project management tools that are, earmarked for construction. Well, if it can be done, using Asana or or Trello or something off the shelf, that's not enough of a differentiation. We really want to see like staggering differentiation, and it's not custom reporting. It's value that can be delivered to the buyer and the user, of course. Defensibility, what is the plan for defensibility? Inherently in any startup, it starts out very weak and not very defensible. But the more that you build into it, the more that you manage the deliberate growth of your company, the more defensibility is possible. And so we want to see that. As part of a founder being the best person to build the company, we want to see what is the go-to-market asymmetric advantage. And really what that is what gives this founder like just an enormous leg up on taking this to market. Is that, a shoe-in to the buyer, community that they're going, or some other piece. So the previous 5 things that I mentioned are things that we don't really have any input into. Those are things that the founder needs to come like with emergent qualities of the founder and of the startup team that they built. These 2 things are just a couple of the things that we can have input into. And this is where we like to work and partner with founders to enable to coach them into how they think about value creation and value capture. One of the things that one of our venture partners has said is a founder always wants to have in their head that they're selling to the CFO of their customer. And to that regard, quantifying the value that you're delivering. It's not just a fun tool to use, it needs to be fun, but what is the clear ROI, typically expressed in dollars or time? So that's dollars saved, dollars earned, time saved, etc. And then how about the value capture? How do you think about that? Value capture is essentially highly dependent on pricing strategy for the founder. And so what needs to be optimized for, and this from our point of view, is the customer ROI. A good rule of thumb, as y'all have all seen, is like 10x value, to price. And a lot of times that's a rule of thumb in some regard, because as a startup, as a small company, there's going to be perhaps a little bit more friction, a little bit more burden on the buyer or the user to interact, but there's a lot of upside because an early customer can have, enormous input into the direction of the product that it's going. And so what you want to do is have a value creation capture ratio that isn't so tight that any disappointment that happens to occur, at a lot of times no fault of the founder, drives the buyer away. So all in all, on the founder superlative side, we think first and foremost, how is this founder uniquely suited, to build the right product and to build the right company, and to take it to market. And then also, does the founder's background, achievements, drive directly mitigate the significant adoption hurdles for the customer segment they're selling into? There are always significant adoption hurdles. One stat that I've heard is, in a fractured market, it takes, with a dozen incumbents, it takes 3x the marketing spend of the incumbent, of the lead incumbent, to like make a ripple. In a dominated market where there's one major incumbent, it takes 17x the marketing spend, which typically startups will never have. So there needs to be, that's where the go-to-market asymmetric advantage of the founder can make all the difference, because really founder-led technology companies are capable of anything. So that's a little bit on the founder superlatives. Now on to critical operating documents, and forgive me if I'm talking fast. I want to make time for Alex and John also. On the critical operating documents, really we see that in running a company, there needs to be structure, and process is important. Flying by the seat of the pants rarely turns out, and it always turns out to surface a ton of surprises. And some of those surprises, especially in the highly constrained environment of an early stage tech startup, can be devastating, mortal wounds, so to speak. And so we've cultivated this short list of critical operating documents, and these are these are relatively simple documents that can essentially be checklists that are continuously referenced by founders along their company building journey. And so you've got, the idea, basically what goes into the idea, the business model, cash model, go-to-market plan, workforce plan, and roadmaps. And so all of these documents touch on the following 6 things and a bunch more. Who are the team members going to be for this particular company? What is the customer segment that this company is going to go after? What is the value proposition that the company is going to, try to communicate with the customer segment? What are the activities that the company is going to do? What's the revenue that's going to be generated off of those activities? And then what is the cost structure to support the activities and the revenue that's coming in? So what's really interesting is that these 6 documents are highly, highly interconnected. And what we see oftentimes is that a founder who might be tripping forward, not stable and deliberate and disciplined in their growth, and it can happen to everybody. It does happen to everybody. It's very, very hard not to trip forward in this, expectation of a high growth environment. But oftentimes you talk about a pivot. Oh, we learned something from a customer, we're pivoting. Well, if you pivot just with one of these documents, you're going to get in trouble. There's going to be a mismatch. We see the alignment, and there's a little bit on the next slide of this, but there are risks to misalignment between these documents. And the rubric that I use is you have a strong alignment, a weak alignment, a mismatch where things are going in opposite directions, or an overload. And an overload can be, you have so much revenue coming in that you can't actually fulfill it because you don't have enough people. Or you've had a drastic dip in revenue, and so your cost structure, your fixed period costs are so high that it's unsustainable and you have to do something. That's an overload situation. And so as you can see, there's clear impact. So revenue, if you decide to change your pricing model or your business model, that's going to impact the cash model. And then that's going to impact the go-to-market plan. If you decide to change your business model and your key resources, who you have internally, starts to change from your key partners who you have externally, then that's going to change your cash model. You're going to go from a more employed base to a more contractor base, and that's going to change your workforce plan, obviously. So alignment with these critical operating documents, and these can be referenced weekly, monthly, quarterly, annually, semi-annually, just according to the specifics of the company, and then how fast you're going. Here again are the connective points, the risks of misalignment. If you change your value proposition, you have to address go-to-market plan and business model. If you change your customer segment, even slightly, you need to review the business model and the go-to-market plan. Hiring and outsourcing. Again, business model, cash model, workforce plan. You can see all of these. There's implications and pivots or adjustments, no matter what side of the business that you're in. Okay, so the last bit, and I hope I'm not taking too much time, hopefully I'm on time here, is capital journey. So this idea comes from we are institutional investors, and a lot of times we're first money in from the institutional side. We do, initial investments, we do follow-on investments. We actually have a venture debt service as well. And so we do minimally dilutive capital. We can facilitate sidecars from our LP base. There's a lot of different options when it comes to investing. What we want our founders to know is, what does the road ahead look like? What are the expectations? Whenever you go on a car trip, let's say from Houston to Dallas or San Francisco to LA or wherever it might be, you need to have the confidence before you leave your house that there's a gas station, within the capacity of your fuel tank. If you don't have that confidence, then you're kind of recklessly going on a trip. And so that's where the capital journey comes in. That's where we want to be able to set clear expectations of our founders such that they qualify for consideration when they meet these expectations. There's no 100%. Unfortunately, we can't always do that. So anyway, the capital stages have various different colors, a ton of different definitions all around, on the coasts and all around the world. These are our stage names and our definitions. So at relatively simple, we have pre-revenue. This is a time where we need to optimize for time to market. I'll go a little bit more into that in the next couple of slides. And then early traction. This is you have paying customers, but you don't yet have product market fit. And this needs to be a high touch, founder-led sales and customer success time. Even if you have the purest of SaaS solutions, it cannot be a set it and forget it and hope they renew 12 months later. Then you have product market fit. This is where we actually can see, and the founder is driving towards consistency in their sales pipeline. And I put V2.x there because typically the sales pipeline is something that is continuously iterated after experimentation on what sales cycles look like, what win rates are optimized for, et cetera. And you have an R&D organization that runs by a mature product roadmap analysis. And then the last one, which obviously has a ton of sub buckets to it, is scale. And we see this in refined unit economics and demonstrated customer expansion. So I'll go into a little bit more on each of these, and then I'll wrap up as quickly as possible. Okay, and pre-revenue, again, we want to see that that a founder is able to demonstrate financial and operational competence. And this is where an MVP schedule is maintained. They're staying ruthlessly focused on the core value of the product that's being built. And sales and marketing efforts are operating at a high velocity. In the early stage tech, industry, the expectation is high growth. The expectation is going really, really fast. And so that's one of the things. Again, we want focus by the founder, and we want formulaic decision making. That doesn't mean robotic, but that just means a rubric. We want to see consistency in behavior by the founders, that when they see certain data points, they make certain decisions, et cetera, et cetera, et cetera. And obviously the founders running the show, there's incredible talent, heuristics, all sorts of things that you can't put your pen on, your thumb on, that we want to be witnesses of. But it's great to have the fundamentals in mind. Again, one of the biggest things that we want to see in the pre-revenue stage is consistent reporting. Transparency, decisiveness. It's always nerve-wracking to talk to an investor and tell them that something's wrong. But consistent reporting is like the best way to engender trust with investors and board members. And what I mean by that is 1 month report dollars, next month don't report percentages. 1 month, report a timeline of trailing 3 months. Next month don't report, trailing, 6 months. Like consistent reporting. So board report to board report, you can really see, what is happening. Next one is early traction. Again, I mentioned this is a high touch founder-led sales and customer success time. Really, we're looking for significant insights that drive the sales pipeline, the iterations on the sales pipeline, and we want to see downward trend of churn. Really, what that does is when we see that paying customers are providing feedback and referrals, there's clear something there. The customers are picking up what you're throwing down. And they are seeing value in what you're doing, such that they want to put their own name on the line to a certain extent to refer, and they're spending their own time. They're showing their own investment beyond the pricing scheme that you have to provide feedback. Then another thing in the early traction stage, and it kind of edges into the product market fit, but it is a prerequisite for product market fit most definitely, is that we want to see outbound and inbound sales efforts exist completely outside of the founder's close network. We want to see that there are weak ties that are being capitalized upon, that it's not, friends of the founder, former business associates of the founder that are really spurring this thing on. Okay, product market fit. We want to see discipline in expenses and data-driven decisions that optimize for revenue. This is a really tough spot. It's such an exciting time because now you finally have momentum, inertia. You finally have a ton of sales. People are so excited. They're so happy. And you just got to really keep focused and stay in that scarcity mindset, not go to the scale mindset yet. Still, be reacting to needs for additional people, additional tools, et cetera. And so we want to see resourcefulness. Anybody's cash model is going to get blown up a couple of months in, no matter if you're being a little too conservative or a little too optimistic. There's market headwinds that are, for the most part, unexpected. And then nothing ruins a pro forma like, aged AR, customers that just don't pay the way your model says they should pay. And so we want to see, how do you react to that? What levers do you pull in order to ensure that the pro forma sales units, which are really the driver of your cash model, can be maintained? If that means you need to 5x the top of the funnel, do it. If your sales cycle is elongated, put more into it. And then customer retention. We really do want to see that customers are staying, and that, even on the cost structure side, that you're investing more and more and more into sales and marketing, especially when you have a less than $1 sales efficiency ratio. It's a virtuous cycle. But what's also important is that the R&D expenses are falling on a pure dollar amount. They can maintain a benchmark 30% of revenue. But as your revenue continues to climb, those R&D expenses should go down on a pure dollar side. Okay, the last one, and sorry I'm taking so long, but is scale. So we see this as a business operating at or below benchmark analytics, and especially as an organization gets increasingly complex. By this time, you might have moved into an adjacent customer segment, maybe have added onto the product suite, and so it's a high bar to set when you're operating at or below benchmarks. Below benchmarks by too much means that you're leaving money on the table. Above benchmarks by too much, money on the table too. Anybody can argue about which benchmark is right. But what we want to see is that the business is starting to be self-sustaining. You always need an amazing leader. You always need the founder at the helm. But we want to see that it's not one-star salesperson. We want to see that there's a process that's been injected into the sales team or into the sales organization, where you can bring on competent and experienced salespeople to run a process, because otherwise you have very limited bandwidth when you are depending on one or two people, depending, of course, on your go-to-market plan. And then the last but not least is customer expansion. We want to see that there's a sophisticated pricing strategy that can capitalize on your existing customers, that's properly placing paywalls, et cetera, in order to have maintain a good value creation to value capture ratio. So that's it. Thanks a lot. I know it's super quick. I'm totally open for questions. Contact me outside of this thing if you'd like to. Happy to share, some of the things that we've seen work. And thank you so much for having me.
Thank you so much, Adam. It was a very great presentation. Thank you so much. If anyone have any questions, as Adam stated, you can reach out to him later. So now it's time for Alex. So Alex is the founder of Arovia. We're looking forward to hearing more about your startup. And you have 1 minute to start at 6:25.
Should I start or wait till 6:25? Okay, 6:25. Okay, I'm going to start without the presentation, and then I'm going to get into it. Good evening, good morning, wherever you are. My name is Alex Wesley. I'm the CEO of Arovia. I've been on CNBC, recognized as this creator of this new expandable display industry that we just started. My background's optical engineering with a bachelor's and master's. I promise Adam and I didn't coordinate on shirts. My understanding is VCs are supposed to wear those Patagonia vests. So I started this company because I was a product manager in high-end semiconductor equipment. If you ever tried to show somebody on a 2 something on a too small smartphone or a laptop screen, you know the problem that we're trying to solve, that there's no large and portable display on the market. And an interesting fact is anytime you make a non-portable product that's a multi-billion-dollar technology industry portable, it creates a multi-billion-dollar market. So that's like, for example, when you go from a phone to a smartphone or a cell phone, it's because you can do more and more places, which exponentially increases value, increases growth. So you wouldn't buy a car that you could only take to one place, for example. So here's our product. So quick demo. It's called Splay. It's got about 10 patents granted. It folds down to the size of this Bose headphone case. You take it out of the case and it expands like an umbrella. So it's really easy. We have the skeuomorphism built in. We have this nanomaterial screen that's fully foldable. To turn it on, you hold in the power button. And subsequently, Splay turns on. For this demo purpose, I'm going to plug into an iPhone. So just as a size reference, there you go. It's about 3 times bigger than the average laptop screen. Focus here. It's got speakers built in. It's battery powered. You can remove the screen that we have and use it as an ultra short throw projector. So it's the only product that can be used both as an ultra short throw projector and a display. And it folds down just as easily. You connect to it wired or wirelessly. And it gives you the big screen anytime, anywhere you need it. Now I'm going to get to the deck here. Let's rock and roll. Okay. Yeah, fun fact, we just won a CES Innovation Award for this year. So coming up in a few weeks, if you happen to be at CES this year, feel free to get in touch with me. So we went through that. So the use cases, ultimately, we see this as a product that can be used by a lot of people. But as Adam mentioned, in the earliest stages of company, you have to find the people that are willing to deal with the bullshit of working with a company, with a startup company. And these are our initial target markets that we found. We're signed with distributors in each of these markets, and we're generating sales in each of these markets. We've sold more than $1 million to date, 1.3 million. We go through distributors because it's a completely new type of product category. The consumer needs to be able to see it, the end user needs to be able to see it in person to engender that confidence that, hey, this is something that will work for them. And distributors have that scale, that sales force that allows us scale to show the product to a lot of people in person. So these markets include low vision, where we're on the Texas Workforce Commission contract, for example. So there's no portable solution if you're somebody who has a lot of issues seeing, where you can actually magnify the text on the go. The second market we call mobile command posts. That includes the military, also emergency response units. So for example, the city of Los Angeles uses it, and professional photographers and videographers as a portable teleprompter and a portable reference screen. And we're working with B&H Photo, the largest distributor in that market. So this is where we fit into the market landscape. What we're really going after, it's not that complicated. We're taking away the trade-off between screen size and portability by giving the only large and portable display. It's our team. So background on optical engineering, nanomaterials, supply chain. We're early stage, like I mentioned, just a bit more than $1 million in sales. But the team scaling, we have great investors on board already. And the products just got on the market right now. So it's a really exciting time for our company. So speaking of which, so specifically, we have a bit more than $1 million in sales and equity funding. We've been on the Today Show. I've been on CNBC. We have great early adopter customers, including parts of the government, the Texas Workforce Commission, and distributors in each of those 3 core markets. And where we are right now is just the beginning. We're creating an entirely new product category that hopefully will someday be called the name of our product, Splay. We're going to have larger screen sizes, touch screens, operating systems. For example, next year, we're going to have a 35-inch version which will be twice as big. So the customer can buy this product that I just showed you and add on the bigger screen for an additional cost. For example, there's different business models, like some of our customers rent the product. So there's a lot to really capitalize on. This is a creating an entirely new type of product category, a completely new type of industry. There's nothing like it. And we have the IP, and we're attacking the market, and we're getting sales. I saw on Adam's slide, he mentioned Net Promoter Score. Ours is extremely positive, which is great to see at the early stage of the company. And we're Arovia, and we give you the freedom to do more in more places. If you're interested in getting in touch with me, there's my email, phone. You go on our website. We just got in additional inventory. If you use the promo code Alex Special, ALEX Special, SPECIAL, that'd be about $400 off, and you'll receive it in the next week or so. Thank you.
Oh, we can't hear you, Sarah.
Oh, sorry. Thank you so much, Alex. It was a very great presentation in a way that how you presented your product live. Thank you so much. Now it's time for feedback and discussion. So whoever wants to start to have any comments or feedback for Alex can go now.
Okay, so I guess everyone wants to buy one. Like I said, arovia.com, arovia.com. I'll put it in here.
Alex, just Chris here. I wanted to. I saw Alex at the is the Owl Spark or Red Owl Spark had an event, and you had the product there, and I was so glad that you demonstrated it, because I think you're right. When you see this thing, it's just intuitive. Like, you know, I started bouncing around thinking of all the different applications, and I was really pleased to see that you kind of had the segmentations all there. And I was wondering, in terms of you know, as it takes off, accelerated growth, have you thought about, you know, how much infusion you might need of capital? Would you think about that? You know, what stage do you think you would be looking for, you know, big investors?
So we already have some interest from some of the big consumer electronics companies. I think we want to get our sales to around 5 or 10 million before doing that. We're doing a relatively small round, about $1 million. I don't know, I guess the public, I know how to say, but we have about half of the money in on that. You know, I believe strongly in option value, so we're trying to get this company to break even as fast as possible, which we believe is feasible in the next year, and control our own destiny as much as possible. We're already at a stage where we can, you know, we have a line of credit from our bank since we have revenue. You know, we have different instruments that we can use. So some of our customers have been interested in investing too. So there's all these different options we're considering on how to keep our cash flow going. So, but I'd say right now we're doing, you know, the $1 million raise. Next year, hopefully a slightly larger raise to really get to that scale point that was on Adam's slide. But we're getting the sales processes in place. We're starting to get deterministic sales. We have good go-to-market, you know, customers. It's taken years to get to this point. The supply chain for this product was very, 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 very difficult, because it's not a product where you can just go to Foxconn and say, hey, go make this, because nobody knows how to make the nanomaterial. Nobody knows how to do their retractable arms. It's a fully custom projector. It's got fabric, you know, soft goods in it. So it's a very, you know, people have tried to copy us, and so far they failed. So it's actually, you know, while it appears like a simple sort of product, it's there's a lot of technology and a lot of nuance in it as well.
Hello, Alex.
Yeah.
It's TJ.
Hey.
Yeah, good to see you here, bro. I saw you once at the Iron. I just wanted to ask if you're ready for export outside the United States, or if you already have customers outside the United States.
Yeah, I'd say the plurality of our customers are US. Second biggest market has been Japan. So yeah, we we're planning to have the US be the thrust of our go-to-market strategy. But if we get data that shows like, hey, you know, Aborigines in Australia are the ones who really love it, you know, we'll move if we have the data.
That's right. Thank you.
I think Willie's trying to comment, but we can't hear it.
Um,
Is that better?
Uh,
Hear me now?
yes.
yeah.
Okay. What kind of patents and protection do you have, Alex?
We have 10 patents granted. We're about, I think it's 3 in the US. The rest are scattered across the world, like in Japan and China and Europe. They're focused on the nanomaterial, so the fully foldable projection screen and the retractable arms, and they're quite broad in terms of what's been granted. I think we also have one design patent too, but the remainder are all utility patents.
Okay, good. Thank you.
I think Rami's raising his hand. I saw the question on the color accuracy. So we're not going after that. I think you know, we're not trying to be a professional editor. It's more of a reference screen or teleprompter in the Pro AV. So we're trying to be very intentional. So if you're somebody who's only going to be satisfied when this is like a 20K screen that fits in your pocket, this is not the product for you at this stage. So it's the people who really value large screen and really need portability. And there's some ancillary value props, like there's no glare, you know, minimized eye strain. We have some customers who have bought just because traditional screens give them headaches and they can't look at them. But really, like this is not at the stage where it's everything for everyone. It's a relatively high price point right now. It's about $1,000, the average price somebody's paying. So you know, ultimately want to get sub 500, but it's really those early adopter people that are in the low vision, the mobile command post, and those Pro AV specific use cases that we're going after at this stage.
Yeah, that makes total sense. I mean, if anything, I can see, you know, after being at a few conventions and conferences and exhibitions, like having a portable display like this actually has quite an interesting value. I'm coming in more from like the geek side of like, I do some photography on the side, so I saw that image where like, wait, this can be a reference monitor to what degree? And so like, I wonder to what extent it can maybe get into that market, but that makes total sense. There are more practical uses to why you'd need a screen like this. And you mentioned all the things you just did that apply best for that. But yeah, very cool.
Yeah, that's a great question. Yeah, and definitely trade shows. It's just I haven't figured out the right go to market. Like if when I'm at a trade show, usually, you know, multiple people want to buy it, so that's one way. But there's a lot of gatekeepers, like all the event companies, like they make a killing in selling a TV for like $500 a day or whatever. So like individual, and it's also only the small companies are interested. Like if you're investing, you know, 10K in a booth, like you're, you know, we're relatively minimal, but the smaller companies like mine, where you can just show up and you have your setup in a minute and you attract more people to your booth, it works. It's just I haven't figured out the right go to market for that.
I think it's worth experimenting for sure. Yeah, because the cost is great for that. And like you mentioned, yeah, very, very cool stuff.
We have 1 more minute, and
Oh.
Jean will start presenting.
The fun is Elizabeth asking me about the fundraising process, or is that for Adam?
That's for you.
I think she's asking you. We've got 1 more minute.
Oh, the fundraising I don't know exactly what's meant by that, but we've raised money. We've been raising on a convertible note, I think at a you know, a favorable potential ROI for investors. It's not a Silicon Valley valuation, though I've been told we have to raise the cap relatively soon. If you're an accredited investor, you know, feel free to email me. I can share our full deck. Here's my email in the chat. And we're more than happy to send a demo unit. Most of the investors have wanted, you know, I'd say all of them have used the product and gotten comfortable with it before investing, or the vast majority. So we're very open to that. We're looking for people that can help with the go-to-market. So if you can, you know, help with connections and these core markets we're going after, or have ideas for more markets, we're very welcome and we're very adaptable. So thank you.
Thank you so much, Alex. Now it's the time for John to present his startup. Hello, John.
Hi.
Ready to hear your presentation.
Okay. Thank you, Sarah. Thank you, Sunny and Sarah, for the team for the opportunity to present. My name is John Wang, founder and CEO at the ESTA, an innovation way to reduce the premature deaths from stroke and heart attack. After losing my father from stroke, I started this journey in 2014. Take this mission to reduce the premature deaths from strokes and heart attack. Each year, 700,000 American people die from strokes and heart attack, costs $470 billion. Current solution failed to prevent the stroke and heart attack from happening. The key to numerous research found out the key to reduce the premature deaths is by prevention. That's the most effective way. So we come out a solution after several years, come out a solution. That's a AI-powered service platform with a mini clinic at the people's home. Basically, that's a mobile app and comprehensive diagnosis tool, emergency device. Our mobile app can check the warning sign and symptoms and find out if the people have this kind of a symptom, allow patient to receive treatment before happening. For some people, they just don't have a warning sign and they happen to have a stroke, heart attack. We can reduce the response time to 1 minute to save people's life. Here's how, just one example of how.
Our mobile app checks patients' symptoms, measures vitals and EKG through our diagnostic tools to assess the risk levels, warning signs, and symptoms of stroke and heart attack. If abnormality is detected, our portable emergency response device connects to 911 and ER doctor to provide online care within seconds to save lives. Our mobile app checks.
Okay, unfortunately, surrounded by successful businessmen, included people, they have business leader, they have IPO experience, and also have a senior IBM executive joining our team. Myself, it's a trained medical doctor with 20 years in prevention and 10 years research of cardiovascular disease. The potential market is $96 billion with 160 million Americans at the risk. Those are the people who have hypertension and diabetes. We think realistically in 5 years, we can reach about $1 billion market. So by that time, we couldn't revolutionize the access to care of strokes and heart attack. Things differentiate from our competitor is that we have a patented system that can prevent the incidents from occurring. And after the incidents occurring, we can reduce the response time from 8 to 14 minutes in 1 minute. The way we can generate the revenue is by service subscription. We can also sell our products, emergency response device, and diagnosis tool. Currently, our manufacturer has a FDA Class 2 clearance. Our system is in pilot testing. Currently, we have 3 US patents, 2 pending, 1 patent in China, 3 pending in China. Our goal is that by year 2, we can recruit 10,000 customers and generate $10 million in revenue. by year 5, generated revenue in about 400 millions, which is only touch 0.5% of marketing value. Our exit strategy is by year 6, IPO, and I think your investment return could be more than 10 times. Currently, we are bootstrapped. We're asking for $2 million. We're flexible either in exchange for equity, convertible loan, or safe loan. And that can be used for FDA clearance and prepare for the marketing. Thank you very much for the opportunity for me to present. And we invite you to join our mission, and meanwhile to capture the significant return of your investment. Thank you.
Thank you so much, John, for presenting yourself. Thank you. Now it's time. We do have 10 more minutes for feedback, any questions to John. So feel free to present your questions.
Okay, any question for me? If not, I'm going to show you some products. Would that be okay? I'm taking this opportunity.
Yeah, please.
Yes.
Yeah. Basically, ours is a service platform. That the service platform, basically, we are bringing the telemedicine to everybody's home, especially for those patients at high risk of stroke and heart attack. Those are the patients, they have hypertension or diabetes. So these people can have strokes or heart attack at any time. So the key to save people's life is by tiny access to care. So we build this system that allow people being treated before the stroke and heart attack happening. How we do that? Because we have an app that can check patients' symptoms and warning sign. So that the app can interact with patient more like a medical doctor ask a patient. So we can effectively detect the warning sign and symptoms. After those symptoms are picked up, we can alert the patient to call 911 or automatically call 911, and then the patient can access to care. It don't need to wait for ambulance to come, because some of the patients, they have only 4 minutes to survive, especially the severe heart attack. So this way, we can significantly improve the chance of survival. And the diagnosis tool is basically you have an EKG at your home, so you don't need to wait the ambulance to come to the doctor. Don't need to wait the doctor to come to your home. Actually, you can be treated, provided guidance by doctor from it's just telemedicine, teleservice. And we also have an emergency response device. It has emergency medicine in the back of the device. I also have a SOS button when patient can push this button and call 911. So patient can be treated before ambulance come.
John,
Yes.
it's Chris here. I am, first of all, I have to say, because you didn't have any charts or anything, I really think, because as you were speaking, I went online and looked up, your product and your website. And I'm just, wow. I mean, this is a phenomenal idea. So let me just, so that I have it right. So if I go on the app and I sign up, and I have an incident, I guess somebody would be able to go into the system and it says I get access within 1 minute, right? So
Yes.
is that through AI, or is that like a live person, or how is that?
Actually, it's a passion because there's two things. One is the AI assess your risk level, and if you are at high risk, we put you on alert, and then you will be monitored for the symptoms and volume size. If symptoms and volume size pick up about app, then the app on your smartphone can collect to real doctor. So you have the volume sign, you are collected to medical doctor, emergency doctor online. So the ambulance actually is still on the way. That take about average 8 minutes to 14 minutes for the ambulance to get to your home.
And so, I mean, I see all kinds of application, especially, they're probably 75% of the old guys like me that meet criteria for this kind of service in many, many ways. So what is the model? What's the revenue model? I subscribe. How much does it cost me to get this thing? And
the revenue model is $30 per month for the service fee, and then for the emergency response device, it's $100, and then the diagnosis tool is for you to be seen by the doctor because it has an EKG, blood pressure meter, and sugar meter. So actually we can make it for $500. But for the EKG, that's a clinical class EKG, not the EKG like on Apple Watch. That's not reliable. So basically, you have mini clinic at your home. You don't worry about things happening. You wait ambulance to come for 8 to 14 minutes. So
yeah,
at the moment,
I don't want to corner all
button.
Well, one thing, John, I was going to say, I didn't want to corner all the dialogue, but I really like the subscription model idea. I also wonder whether or not you could, the other part of your value proposition might be savings, health insurance. I mean, if you have this in place, I'm an insurer, I might get you a better rate, right? Because you're more likely to not cost me. Yeah.
You're 100% right, because just stroke and heart attack cost insurance company $470 billion a year. So we can save insurance company huge amount of money. I was talking with our IBM executive. He's our advisor. He said that maybe the better business model would be your approach to the insurance company. Like they pay for their monthly fee. Because we can save a lot of money for the insurance company. We are not only save people's life, we are saving a lot of the cost for the insurance company.
John, question: if you follow the EKG over a period of time, can you predict
for the EKG
problems over time, like we do, for example, in manufacturing, we do preventive maintenance?
I'm sorry, I didn't follow you. Would you repeat again? I'm sorry.
Yeah, can you follow the EKG over time and see if there's a degradation of the signal compared to the original signal? Just like we do it in manufacturing, we do preventive maintenance by comparing the actual measurement to an original measurement of a pump or a valve, things like that.
This is okay for us. It's the EKG. It's a clinical class, and this is only used for those people they had a heart attack.
Yeah.
So the heart attack, usually, you probably, the patient use this, in a year, maybe 1, 2, or 3 times. Okay, they don't need to be, frequently use it. So I don't know. I can answer your question well because I can only tell you this EKG can pick up if there's a heart attack. That's as accurate as the one used in the hospital.
Yeah, my question and my suggestion was maybe there's a way of using your device and expanding its role by comparing the measurement of
That's great.
time
That suggestion.
and predict when something can happen.
Yeah.
Okay.
Thank you.
Thank you, John. Thank you so much. Yes. We do have 4 more minutes before we end our event for today. So if anyone wants to share anything, feel free to do so before I give the closing remarks.
Hi, John. This is Elizabeth. I just have a quick question. How many users so far for this product?
Okay.
Yeah.
We are in pilot testing. More than 50 people from a senior center. They are testing. Yeah, but we still need to get the FDA clearance before we can put it on market.
Okay. So what is the future growth strategy?
Future growth strategy, because as a startup company, the most challenge is the fund, raising the fund. So actually, we are very conservative because the market is huge. It's a $96 billion market. So our goal is in 5 years, we need actually 450,000 customers that could generate a revenue of more than $400 million. So that way we don't get overloaded.
Okay.
Yeah.
John, I'm not sure, because you mentioned raising $2 million, and there are a lot of people on this call. But I for one, if you have a pitch deck to do that, great. If you need anybody to provide any input on that, yeah, I mean, you can get a hold of me, and there's on the line that can maybe help you take a look at it, cold eyes.
Okay.
And give you some ideas, because I think you've got a terrific product.
Thank you so much.
Part of
Chris,
being able to
okay, I will
money,
I will send this to you. Appreciate that. Yeah.
Right, I think, and I mean, the first presentation we had by Adam, he had some really good insights in terms of maybe what an investor would be looking for, from you. And I think you check a lot of the boxes. I think it's how you package it will be important for you to be able to raise the money.
Thank you. Appreciate it, Chris.
And my only other comment, Sarah, is just amazing. I know it's such, like I started, it's such a busy time of year for people to take time off. And I don't know about the rest of you. I get energized. I love hearing about, stories like yours, John and Alex, and I mean, all the founders. It's just amazing, all things going on in our backyard, and anything we can do as a community to help. That's really what we're about as Born Global. Back to you, Sarah.
Yes, yes. Thank you, Chris. Yeah, so thank you so much for Adam, for Alex, and John. It was very nice for you to share your presentations and your startups and your valuable expertise with us today. So thank you for us. Thank you for joining us, and please stay connected through our Slack. That's our network platform. And yeah, we will look forward to your involvement in our upcoming initiatives and Born Global events. Thank you so much. Have a great, happy holidays. Bye.
Right.